This is Dennis. I wanted to do a brief intro into this week's recording of how to make money trading stocks, options, and ETFs. So we did a couple things new this week. One, we went live on Facebook and showed this report. I want to welcome everybody who joined us on Facebook, on YouTube. I really would like to ask you to subscribe to us or follow us on Facebook, follow us on Twitter, follow us on YouTube, soon to be able to follow us on LinkedIn, and enjoy today's session. We're in the middle of earnings season. We got a lot of stuff to cover in today's session. One of the other things I want to show you is this free report that we're basically providing from Active Trend Trading. It's called the Magnificent 7 ETFs, Multiply Your Returns with No Extra Work. You know, it comes a couple of really good conclusions. One is you can safely yield or wield the sword of leverage with simple supporting tools such as seasonality, technical chart patterns with these special ETFs and increase your return with no extra work. So if you're interested in getting this free report, it's a good one. Just register with us for the free Active Trend Trading stuff. Aloha, God bless everybody. Hi everyone, this is Dennis. Encourage you to stick around to the end of today's video. At the end, we'll show you how to become a premium member and save 20% off the regular price. Thanks,
good
mahalo.
Afternoon, everybody. This is Dennis Wilson with the Active Trend Traders. I want to welcome everybody to today's session of how to make money trading stocks, options, and ETFs. You should be seeing the screen. I just want to double check and make sure you, in fact, are seeing the screen. If you're one of the attenders on the webinar, I shared my screen. Are you seeing where basically it's myself and Brandon? Yes. Okay. Cool. That's what we were anticipating. So, hey, let's go ahead. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is no indication of or promise of future performance. Part of what we do with active trend trading, we want to basically focus on a process. Our process is very basically. I basically try to clarify, simplify so that everybody can multiply their accounts. That's my motto. That's what I've been trying to do since I started active trend trading back in 2007. Because what I wanted to do is basically to provide a system that I would have loved to have when I was working for a living. And so that's one of the things that I think is very important, and if I can help coach folks with it, and I'm always looking for means and mechanisms by which I can continue to simplify what I'm doing. I've got a couple of training ideas that are going to come out for premium members where we're going to be specifically doing that. I may open up some of the training for non-premium members who want to just join and get some education on how to basically generate some additional income with a very simple trigger to get in and get out. So the objective of today's session is basically to take timely, actionable intel review at the end of the week, seeking to clarify, simplify market decisions so wealth can be multiplied. Our big issue, the gorilla in the room going into next week, of course, is the Fed. If the Fed, it is priced into the market already that the Fed is going to reduce rates by at least 1 basis point or a quarter basis point. We'll see if that in fact does happen. If they go for more than that on this first initial easing, the market will probably rally. When you look underneath the hood, though, why is the Fed reducing the rates? And if you say that, well, the Fed's reducing the rate because the economy is potentially slowing, you would be right. We've had a great time over the last couple of years, almost 3 years now, where the market has continued to bust higher and higher and higher. However, there may be some signs that the economy is a little bit tired, and so they want to generate some additional consumer activation within the market, and so that's what we may see. So earnings, we were looking at the earnings. You know, I'm just going to call this earnings season so far the good, the bad, and the ugly. I'm going to look at 4 stocks that you can be aware of going into next week. And so here we go. Here's where we're sitting as of, we're up about 22, almost 23%. Now this is net, not including what what has been paid out in commission. We're actually up probably closer to about 26%. But you remove the commission and it brings it down to this. As you can see, the markets have been continuing to move higher. Things slowed a little bit today on the Dow. The Russell looks like it's starting to pick up and may, jump and do its thing for leading this rally. Let's take a look at a couple of, at these indices to give you an idea of what's happening. Since next week is the final week of, or the final 3 days of the month of July, we can start looking at the monthly charts along with the weekly charts to see if the monthly charts are, are basically saying anything to us that regarding any type of candlesticks that may be happening, candlestick signals. And right now we don't have a lot. A couple of things to be aware of on a monthly chart, though, is one, negative divergence going on as we continue to press higher, making new highs. The momentum is not. So at some point, we are close to running into a level of resistance that has been identified by this megaphone top. We'll see if that, and basically we hit that and then roll over. You can see here on the weekly chart, we're pushing up. We had a bearish engulfing pattern for last week. That has now been voided. So if you are keeping score, this signal right there, that bearish, that red candle, is no longer valid. We have busted up ahead of, above that. What about the NASDAQ? And we'll just look at the Qs as a substitute for the NASDAQ. Similar type situation. We had a bearish dark cloud cover last week. Prices have now busted out of that area, and we actually took out this high, and that corresponds to, I want to say, this level up here corresponds, the highest part of that, to the extensions off of this move here. Let me draw in a Fibonacci on that really quickly so you can see that. Remove that drawing. So what I do is I go here from this high with a Fibonacci to this low. You have to get it to catch. There we go. To this low. And as you can see, oftentimes when you get a move down, the measured move up, the expected move is at least up to the 1272 extension. And if that's the case, we will get up there, and that's at the 197.44 level, and it's just a stone's throw away. Price action is hanging around these upper Keltner channels, though. Remember, the upper Keltner, the purple one, is the 3 times ATR. The other one is the 2 times ATR. These Keltner channels, typically the 3 times ATR, they basically contain about 95 to 98% of the potential price action on the chart or on the entity. And so we're approaching that. We're not totally exhausted up there yet, but we are approaching it. What else are we looking at for this particular entity? Similar type situation as the S&P, negative divergence, monthly chart, negative divergence, weekly chart. Let's see if that corresponds to what's going on with IWM. One thing we see with IWM, we had this little downtrend flag. We have come up and challenged that. We do not have negative divergence. We're just staying below this level. When we have, one of the things we can do is we can lay on a line across the top of these peaks here on the weekly TSI. And I'll show you what that looks like. And if that is broken to the upside, that's a good indication that, guess what, we're probably going to go on to higher highs. So it's got a little bit, looking for a clear break. And it may, in fact, not break, just get up and bump its head and roll back over, and price action could do the same. Right now, from a weekly standpoint, the Russell, as represented here by IWM, has moved back up above the moving averages. And so if we retest back in the moving average, that may give us an opportunity to go ahead and buy some IWM via calls, via put credit spreads, and or buying IWM on its own, or TNA as another option. So let's go over and let's see what this looks like on the daily chart. Okay. Weekly, daily, there we go. Then you can see we had a nice pullback back into the moving averages. It failed at the 50 earlier in the week and then rebounded. We've got that right being interesting. It gets right back up to this downtrending trend line, which acts as a resistance line, and pow, it rejects that and pulls back down. But it didn't reject it for long. So this nice move up here on Wednesday of this week, we'll see if that is valid. It was on higher volume, so that's a good thing. Let's take a look at it. I want to just go back to the slides real quick. We'll bounce through those. Strategic compounding, that's one thing that we're focused on. This week, we had a lot of earnings trades. We were short in meeting our 5% compounding factor, but the week before we had gotten over that. So we're up about almost 190% on strategy 2 that we started with $10,000, and now we're up to in that account, and now we're up to about we're up to actually 29,000 for the total account. Looking to add in 1451 this week. Our earnings trade, we got started with those again in the 14th. Earning trades, and that's what I said, the good, the bad, the ugly with earnings. Our earning trades have not been acting like they did last quarter. And that's okay, because basically we have a very controlled amount. Like, let me show you what we're doing in one of the areas. This Amazon trade right here. It looks like we're going to lose about $80 on the Amazon trade. Well, the upside on that Amazon trade, if it would have just stayed within the confines of its expected move towards the upper side, well, the upside on that was about a $1,600 gain. So we risked $80 to potentially gain $1,600. So if you're interested in those kind of trades, you need to find out about how to become a premium member active trend trading. The other things that we are sending out to all premium members now are the plan for the week, where we identify the little tables on what we're particularly trading. As you can see, we've filled in earlier. We're out of LABU now. Twilio is still moving up. Earnings on Wednesday, it's up nicely. Boeing, nice move on it. And this week we were trying to get a little bit more Twilio, didn't happen. And Roku didn't happen either. And that's okay. We had our plan, price actions, and we identified where we wanted to buy. Didn't come back and touch those buy points. And that's fine. I'm not going to chase. because we want to protect the capital going forward. Okay, if you're interested in that kind of stuff, I encourage you, hey, here's how to become an active trend trading member. And right now we do have it where you can get the monthly is $124.99. And you can actually save 20% off that if you do go with the quarterly. And so $299.99, you can just go here to this website, activetrendtrading.com/membership/. Yeah, give you an opportunity to try it out for a few months and see how you like it. And so one of the things I'm looking at, NASDAQ tends to pull back a little bit, weakness into the midsection of July, into the first part of August. We'll see if that, in fact, happens this time around. Same thing with Russell. Russell tends middle July to the first part of August. Tends to be a little bit weak. This has been kind of a screwy kind of year. The Russell has been, the weakest of all of them, so it may or may not give us this little pullback. But we want to be looking at setting up with the Russell and the NASDAQ for going into the end of the year. I'm going to throw this out here. Basically, this is something to be keeping your eyeballs on. Guys, natural gas tends to get a bid going into the mid part of August with a really spike up. It's in preparation, getting ready for the winter months, and some people, they actually buy the natural gas, I think by via propane or something, and they get it put in their tanks and all that kind of stuff. And you get a little bit of a spike up. I think guys are getting ready for the winter months back on the mainland. So keep our eye on seasonality, and this is a 16-year range. This is what tends to happen with NatGas, and NatGas is due for a big move. Hey, future presentations and events. I've got the BAM webinar coming up on August 3rd. Monthly, I will be presenting at the Honolulu IBD meetup, August 6th. And I'll be refining the 8-day EMA trigger. It was interesting. We start, I basically, now that we've done the renovation on the house, I can start getting active with other traders here on Oahu, on the island, in the islands. And I walked into the meeting. Mark was there, and the guy who was leading the meeting, Steve, he gave me a big hi and welcome, and he goes, "Hey, I want you to know I've been trading the Wilborn method." Now, this was a presentation I made about 5 years ago to the Honolulu IBD group, and I go, "Really?" And he goes, "Yeah." I go, "How's it working for you?" He goes, I've been averaging a little bit over 60% per year utilizing that method." I'm going, "Oh." And so I asked him, I said, "Can you please send me the information about what you're doing? Because I need to make sure I've refined everything that I'm approaching it, because my target every year is only 40%. Anyway, and then our premium members, we do training every Wednesday night. And as I said earlier, if you would, if you want to follow us on Facebook, here's what it is, facebook.com/active trend trading. That's where I post some of my live and my free videos. YouTube channel, follow us there. That is Market Tech Talk. And then, of course, Twitter, which is Active Trend Trading on Twitter. And so with that, I'm going to look at 4 stocks. There's a little bit about Brandon, who's working with us now, and this lovely lady, Michelle, my wife, and then Brandon, his lovely wife, Sharon, and our 2 grandkids in Boise, Idaho. So I'm going to look at a couple of charts, and then we'll close off. So if you're a premium member, stand by. We'll get going with premium service at 12 noon. That's Pacific. Aloha, trade well, prosper, have a great weekend. Let's look at those charts. I'm going to give you some trading ideas. Now, I don't normally do this, but I want to start getting this information out to you. I'm looking at, because of earnings, everything has been whacked, and so you need to think about, how do I want to trade? How do you want to trade going forward after all this violent action on the particular charts? And I'll start with Netflix, just right off the bat. What is Netflix telling us? Well, Netflix basically went up, reached the top of its channel, started falling, had earnings, and accelerated down to the downside, took out this support here, or the support at 314, and now what's it doing? Oftentimes, now it may just shoot down all the way up to 380 or not, but it's probably not going to do that. It's probably going to have to work its way back up. The other thing that we need to be aware of is when it gets up into these past levels of support, oftentimes those past levels of support, they switch over and become levels of resistance. What are some of the other things we can look at? Is hitting the 20-day moving average. And so we have ripped through the 50 down here. We're bouncing back up. So start looking for where Netflix can reverse. For our premium members, I'll be covering a little bit about Netflix and some of these other stocks that have been impacted by earnings this week. I'll be covering that this weekend's On the Radar report, where you get your trade plan for the week. The other one, Tesla. Tesla has been a challenging stock to trade this year for many, many reasons. It's been whipsawed all over the place. It got whacked after earnings. We have now dropped the 50. Whenever a stock or an ETF drops the 50, that typically tells us that we are going to continue, that changes the character and personality of the stock. So we'll look for Tesla to pull back up into the moving averages for a potential trade to the downside. That's what I'm looking at. We talked about Netflix. What about our buddy Google, or as it is now called, Alphabet, or as I jokingly like to refer to it as Big Brother. As you can see, we gapped up this morning after earnings yesterday. We gapped up today above this past resistance, back into a level of resistance. Anytime you have a gap down like this, or a gap that needs to be filled, which is just about filled the gap, that whole area in there is a level of resistance where things may not go any further or higher from that. We'll see what transpires here, whether it's going to pull back a little bit more or not. But Google is on the strong side of, and we want to be looking for potential long trades or long plays in Google. And our other buddy, Amazon. Amazon, I was jokingly saying, was like it was taken to the woodshed this morning. However, look what Amazon's doing on a daily chart. Yes, it fell, almost hit the 50, and it's starting to rebound a little bit. And in fact, if you did one of the, if we can get it up to about 1964, the trade we did for premium members should come in to be a profitable trade. We'll keep our eye on that going into the end of the day. So what am I doing? Amazon is still in a uptrend. However, it is showing some weakness, has fallen below the 8 and the 20. I'm going to look what happens to it when it gets back up into the 820. Is it going to roll over from there and therefore be a downside trade or not? So that's for the stocks that I'm watching going into next week. Should be an exciting and a fun week. And so, as again, until next week, if this has been beneficial for you guys, hey, again, just follow us on the YouTube channel, on Facebook and or Twitter. And of course, you can always become a free member, which I encourage you to do that, of Active Trend Trading, and you'll get the notifications and a couple of free trades throughout the year. So with no further ado, I'll say aloha, mahalo for joining me today, and God bless everybody.